is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. As always, we love to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And we're up 9 on the S&P cash. Dow 30's up 178. NASDAQ's up 52. Russell's up 5.5. We've had a day here where, if I'm reading the tape right, which is the only way to tell during the day, we're having at sometimes half of the entire market being shorted. And the question is whether or not people are wanting to get out, or if they're really that incredibly bearish for the Fed meeting tomorrow. We also have some news coming in to the market about how many hedge funds are actually in trouble on this move. There are over 3,000 hedge funds. At least some of the discussion is that maybe 1 out of 10 of those is in some level of liquidation, as they can't really find anywhere to sell their stocks. Of course, they traditionally do the wrong thing, which is sell the strong stocks because, of course, they can find buyers for them and end up holding the bad stocks, which just get worse. Not exactly sure where we're in on that. I'm betting the other way. I'm betting that the Fed figures out that they know that they broke the markets and probably broke the upward trajectory of the economy. And the old saying is, if you broke it, you own it. The president and others reminding Mr. Jerome that he does own the market now. You had to look at one of the fastest pulling out of long-term support in the market. Not only were they raising rates, they were pulling bonds out at the rate of $50 billion a month. And it's not incredible to think that they didn't snap the back of the market and other things. But that would be it. So the question is, how many of these things do we go? Is there a good sign in the market when we don't see some kind of forced selling at 10:15 and around 2:30 to 3, which is where these big hedge funds are going to find their the big men of Wall Street telling them that they need to raise some capital. So I'm watching that in the next 15, 20, 30 minutes to an hour. We'll take a look at it. We've seen so many. I've seen probably 3 or 4. There may have been more. Huge pushes and huge shorting. As I said, sometimes I was watching some of these things have half of all the orders start as shorts. That always tells me that we have a market that could break either way. Probably a good time to be in options if the premiums aren't too high, because at least you're limiting your risk. But when you get this much on one side of the boat, normally it's going to do something. Either we're probably going to, the Fed's going to not get the message, and we're going to see a market crash by Friday, or we're probably going to be up 1,000 points on the Dow, maybe 150 points on the S&P cash, and maybe 300 or 400 points on the NASDAQ, the big one, not the NDX, because there are so many people on each side. The Fed has the power to crack this market like a walnut, and I don't know, I don't believe that they haven't gotten the message. A lot of people thinking, well, they won't raise tomorrow. I think I saw the Fed funds rate come in, maybe I saw it. I think it was a 98% for a rate hike tomorrow. So no one's going to be surprised. What if they came in at the 1/8 of a point raise? Or what if they came in with none? A lot of different scenarios. Everybody's saying, well, then everybody would truly be scared. And I don't get that. No one was scared in November of 1998 when Paulson walked in. I think it was Paulson, wasn't it? Walked into the market at, what was it, about, I think it was about 1 o'clock. I'd only been trading full time for about 2 weeks. And we were down 500 points on the Dow, which is about like 2,200 points today. And by the end of the day, we were up 500, or the equivalent of 2,200 today, when they stood in during the long-term capital management fiasco. And again, they should have never, the Fed should have never let it got that far. The Treasury shouldn't have been involved. Everybody kind of has 20/20 hindsight when you shouldn't let anything get that far. Well, certainly they've let it get that far. And at this point, are they going to fry all the shorts? One of the things is when everybody or half the people in the world think that the right thing to do is to short, I always pause and reflect. I love the fact that at least I've been able to get some options that don't guarantee me a profit, but they certainly guarantee me a very low loss if I'm not on the right side of them. I did actually add a actual equity this week because it was actually, well, when was that? I can't remember. It's about an hour or 2 hours ago. Just because it was the absolute best looking stock that I've seen in a while for a chart. Are we up a little bit? Probably up from when I bought it, certainly. But, it's one of those things where if I can get into a decent position in it now, we get a trade deal in early January, I might be in one of the best parts to buy a low. And I'll always remember the most money I ever made in the stock market. It wasn't being absolutely right on shorting the housing stocks in 2008, although I was, May 5th? It was actually being right at the lows in March of 2009. Made a lot of money, no doubt, being short the housing stocks and the banks on May 5th, but made so much more off those March, I think it was March 5th. I think it was also like the 5th of March or something. Maybe it was March 19th. When I bought so many stocks that were down on a 10th of the volume where they had gone down, I think that was in March. I think they were down in November, bounced a bit, came back down in that March low, and literally was no volume in half the market. But at the same time, some stocks had just 10% of the volume and had tested those lows. Starting to see some fairly decent looking charts out here in the market. Doesn't mean we're going to go higher instantly, but I think the short thesis may be long in the tooth. We'll be back in a minute.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And as we can continue on, you can give me a call at 877-927-6648. And what else is going on here? Let's do a little history, and then we'll get on. I just checked it in here. It was Mr. Rubin and Mr. Greenspan in November of '98 who had finally stepped in after stepping out for too long. But we'll go on. Oh, come on. My thing doesn't want to do today. Come on. Where's it at?
This is Houston. Say again, please.
Houston, we have a problem.
Yeah, my history doesn't play today. I'm not exactly sure why here. Oh, there it is.
Just a little bit of history repeating.
On this day in 1865, following its ratification by the requisite 3/4 of the states earlier in the month, the 13th Amendment is formally adopted to the U.S. Constitution, ensuring that neither slavery nor involuntary servitude shall exist within the United States or any place subject to their jurisdiction. There's still, why we make a big deal of this today, still 70 countries where this does happen in the world. And we don't talk about it much, but it does happen. But probably shouldn't. Let's go ahead and look at some charts, at least what I was looking at this morning and today. So we'll take a quick look at these. Oh, need to get this back up here. Get that. Okay. And we'll go through a handful of these. Give me a call at 877-927-6648. Had some interesting stocks that look like they're closing back in the trading range today. Alliance Bernstein Holdings, a symbol on this one is AB, had a low down here on December 6th of 2.3 million shares at 25.88. Got through it with less than half of that yesterday. It's now closing back in the trading range. I don't know if there's that much in this one. It's just that there are a lot setting up today that are doing this. You want to watch for the close. Some have actually busted out the lows today, and most of those are in the biotech sector that I've seen. I think it's a Chilean Pharmaceuticals, ACHN, a handful of the other ones. He had a big day yesterday that actually went through the previous low on higher volume. Today, you're getting a follow-through on that down to $1.90. Yeah, it's a penny stock. These do seem to be the weakest of the bunch. Mid-caps seem to be doing a little bit better. Do have a lot of patterns, though, that are showing some fairly decent support and actually decent patterns if the market wasn't so horrifically looking bad. And ACI Worldwide is one of those. Nice gap up back on November 8th. Had 3.1 million shares. Back into that with 826,000 shares yesterday. Today, a little doji out here at about 400,000 shares so far. So again, we're kind of coming into some fairly steep support, pretty significant support in many of these. Alder Pharmaceuticals, one of the better supported ones here today. ALDR is the symbol on this, going back into its March 22nd low of $10.90 that had 3.1 million shares with about 300,000 shares today. AMJ, which is JP Morgan's Alerian MLP Index Fund. It is an ETN, so I wouldn't buy it, but I'm watching this one, and it may have the volume to break out the lows of the 5 million share low, March 27th. It had a bigger high volume low spike at 2361 on March 15th at almost 10 million shares. And again, a few of these are starting to dip back down and close below previous lows. You want to watch maybe what you see in this AMJ if we don't have a rally and see how it does. But volume starting to pick up a little bit. Could match that smaller later low, but probably not going to get into that 10 million share low. AMZA, which is, let's go ahead to the next one. Arista Networks. Semiconductors holding up fairly well today in comparison to many of the other sectors. What were they? What we were looking at here? SMH is up $1.67, which is just a little under 2% at 91.47. So certainly part of the stronger part of the market. When we look at Arista Networks, the main low was $213.11 on October 29th. Came in with just under 1 million shares. Yesterday, we actually broke that with a little bit more, 1.3 million shares. Volume about 6.5 million shares now. But again, one of the weaker ones out here. ARQL, which is Arcule, like Mr. Perot. Hercule Poirot. Anyway, this one is testing its lows on lighter volume. It's about 20 cents under the previous low of November 1st, $3.23, 2.4 million shares. We've got about 1.1 million shares. So it's going to come in lighter, but the question is whether or not it doesn't turn around and close back into the trading range. On assignment, this one is going back and looking at a much longer term gap that goes way back. And this is to the gap on, what is that, the 26th of October, 2017. This went up on about a little over 1 million shares. Got back into it yesterday with under 400,000 shares. Today, a little doji out here with 200,000 shares. So again, we're not seeing a lot of volume and a lot of these sitting right at support. And if you sit here long enough at these support levels, it does look like a handful of these things are breaking. DeVry Education, ATGE, back into its gap up of the 2nd of November. That had 1.4 million shares. Yesterday, 609,000 shares. Today, just 245,000 shares, but completely filling that gap. ATHX, back to its support, which is this big gap up on 2.5 million shares going back to March 13th of this year. 200, well, let's call it 2.5 million shares. Doesn't matter that much. Yesterday, 1.8 million shares. Today, 435,000 shares. So again, a lot of support areas showing up. I wouldn't be a big fan of buying Avon, although I hear they're calling. Avon calling. Remember that? I haven't heard that forever. Are they still around? This broke through its previous November 1st low. Hasn't done it with any kind of volume. You had about 6 million shares. Today, you got about 2 million shares. Yesterday, about 3.4. But it's been going through that November 1st low on lighter juice. BDX. Okay, what else do we have? BDX, which is Beck and Dixonson Company. The last major low was November 6th with 2.7 million shares, 225 bucks. Dipped down below it yesterday with 1.17 million shares. Today, 500,000 shares as it sits on that previous low. We'll be back in a minute.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Oh, Avon's calling, apparently. Briggs & Stratton Corporation, BGG. The October 29th low, $13.33. 1.3 million shares. We talked about this a couple of days ago. Got into that low with 361,000 shares. This has been going sideways for a fairly nice consolidation. Don't know. Maybe this is kind of a seasonal stock anyway, with everybody buying lawnmowers in the spring. I think it is, but it might be interesting. Some of those trade tariffs might help Briggs and Stratton, who I think still makes the engines here in the United States. KBE, another one that's consolidating out fairly well. The Buckle, which is a retail store, still not very hot on retail stores because, of course, they're in the dying malls. And October 19th, we saw the low at at $18.03 with 1.5 million shares. Got into that on December 10th with 275,000 shares, so some fairly decent light volume. Been going sideways. Energy is about the same on the way up, on the way down. Got to say that it's nice that this thing's holding up, but generally, if these things are by their lows, retail stocks by their lows, by the time you get into probably around the 1st of February, these things, and they're nice earnings or any kind of big sales that come off, you know what happens next, and that is no sales until about March. And generally, they do not do well in that early spring part of the session. Give me a call, 877-927-6648. Bank United, we talked about this, I think, yesterday, October 24th, $29.83 with 2.4 million shares. 2 days ago, 840,000 shares. Yesterday, 1.1 million shares. Today, down with about 725,000 shares. Again, you need these things to close back into the trading range to get the signal, but certainly not a lot of juice as we go out into some of these. What else do we have? Okay, we're still up 9 on the S&P cash, 54 on the NASDAQ, 161 on the Dow. What else do we have on this? Carbonite, the backup company, had a big gap down on November 2nd. Been down to 24.88 from that 26.64 low. But you had a ton of volume, that 4 million shares. Pretty light volume yesterday, 400,000 shares. Today, 200,000 shares. Again, a pop back into this 26.64 puts that back into the trading range, and you'd probably look for that in an improving market to go back to about 33 bucks. CHKP, another one out here that is back into a big move higher. That's Checkpoint Software. It was up on 3.1 million shares back on the 11th of July. Came back in and tested that the first time on October 29th with 1 million shares. Yesterday, into it was 760, is that right? 822,000 shares. Today, just 408,000 shares. So a lot of these things are at their tipping point. They're either going to make it or break it. What else do we have? Commercial Metals Company. I've seen a few stocks in this sector that look fairly good and are the patterns that I love. And that is, you have a decent sized low. In this case, the October 24th low at $17.14. You have 2.35 million shares. You go up to $20.93. You do it on some decent energy. And then you have this long sell-off from November 1st all the way into yesterday, where it closes underneath the previous low by half the volume, more than half the volume, a little less than, a little more than half the volume. And today, you're at 17.30, which is 15 cents, and you're back into the trading range. That makes me kind of think that maybe the market's starting to sniff around some kind of trade deal that would certainly help some of those more industrial metals like silver and copper, some of the other things. Okay, what else do we have? We got a lot of them. Okay. Cognizant Technologies, back into the October 30th low that had a little under 10 million shares at 64.94, got to 64.05. Hasn't closed back into that trading range, but you are close. Another 50 cents back in it, and you will have successfully tested the previous low on half the volume. DDM. Okay. What do we have here? ProShares Ultra Dow 30 was looking at this breaking the previous high volume low of October 29th that had 1.7 million shares. It came in light on the 14th with 1.15 million shares. Yesterday, 1.6 million shares, which actually just got close enough to that October 29th low. Didn't really blow it out. Today, you've got about 611,000 shares so far. DPZ, which is Domino Pizza, testing its previous low of November 20th that had 900,000 shares at $241.70. Got into it yesterday with 602,000 shares. So came in, a quarter light yesterday. Today, 339,000 shares. So let's figure we're going to do 550,000 shares. Still going to be lighter. The question is whether or not that breaks in the next day or two into lower prices. We're up 4 on the S&P cash. Nasdaq's still up 39. Russell's up 5. Dow's up 128. Dexcom, DXCM. This one's been holding a very nice level since August the 2nd, when this came up on 7 million shares. It's tested it on October 11th with 1.6 million shares, 1.1 million shares on October 26th, November 20th, 2.1 million shares. It broke through that yesterday with 1.3 million shares. Today, you got about 683,000 shares. Any close probably above 116, 117 would have that support yet hold again. I like the energy off this December 4th high. It has been lighter all the way back down. I'm trying to find out what let's go ahead and read what these guys do, because it does look like it's holding fairly well. What do we have? Medical device company focuses on the design, development, and commercialization of continuous glucose monitoring. Okay, I'm assuming this is for people that use insulin and have diabetes. G5 Mobile continuous glucose monitoring system communicate directly to the patient's mobile device. Okay, so your phone tells you that you need some insulin. Okay. Holding fairly decent out here. Not a lot of juice today. Again, you need to close back about 116, 117 area. And that would show that that is continued support in that area. When we get back, we'll look at the ProShares Ultra Short Dow 30, the DXD.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And I see we've got an escapee. I've been joined by El Diablo, the trading dog, who makes most of my decisions for me. But I don't know, he's got something going on. We went to the vets today. He's not happy, probably not feeling well. Got his shots, but he hopped off on me just before we started. So I'm gonna have to put him down. He may not be happy, but he escaped from the bedroom. I'm not exactly sure. I probably didn't close the door well enough, but we'll put him down. Oh, down. Anyway, yes, let him co-host. Well, he probably would be pretty good today. Still up 2 points on the S&P cash as we continue to have. I'm watching the time and sales here. Just a lot of these things with monster shorts, sellers on it. Everybody trying to get in on the action. We were talking about the ProShares Ultra Short Dow 30. And so, oh, yes, his name is El Diablo. Sometimes I call him Senior Diablo. We hit the Ultra Short yesterday, the DXD. Previous high had 4.2 million shares in the high with 1.9 million shares today. So we got into that previous high with half the volume. Got a little doji out here today. It closed back above 34.24. Would put that back in the longer term trading range. This all started with a downtrend that actually started in August 5th for this, which was actually an uptrend in the actual market. So keep an eye on that. We'll see it. Okay. ELY. Oh, that's the next one. Callaway Golf made a nice low yesterday. Tested the previous low of 7 million shares at $15.61 on November 30th with 1.5 million shares. Popped back into the trading range today. I guess we're probably close enough. What, we're 2-3 months away from golf season starting for most people. Down here in Florida, it's, what, 11.5 months? I guess the northern Yankees start, what, March or April? Probably March. I bet there's people out the first nice day of March are out there golfing. Callaway Golf Company, anyway, pretty nice lows back out here and maybe a seasonal trade, but it is retail nonetheless. Okay, what else do we have out here? That's another ETF, so we'll look at it. Okay. Essence Group, look at the next one here. Oh, we had a little sell here off 7 points on the S&P cash. NASDAQ still up 15, though. Global Cash Access Holdings, EVRI. Now, this is kind of interesting. EVRI had a decent low at $5.60 back on November 20th. 1.5 million shares into that with 843,000 shares today, just 309,000 shares. You need to close back above $5.60 to get the signal. EXPR, which is Express, has made a big low and reversed on it on November 29th, did so with 16 million shares. Last couple of days as we've consolidated out, 2.2 million shares today, 1.4 million shares. Do we have somebody on the line? Keep hearing little voices. Of course, that doesn't mean it's just me hearing the voices. Okay, Freeport McMoran also testing its lows, the October 25th low to $10.59, 46 million shares with 27 million shares a couple of days ago. You've had 3 dojis in a row here. FGen. Okay. Fibrogen. This one's a longer term test of a gap. Had a very nice gap up going back to, what was that, August 8th of 2017, 9.4 million shares. We're back into that last couple of times on 386,000 shares. Gapped a little, or kind of gapped up a little bit today. Certainly went to 41.84 and it's kind of reversed a little bit, but certainly 500,000 shares is not anywhere close to that previous low. And what else do we have? Flex on. Big gap higher, goes back to May 26th of 2016 with 2.3 million shares. We've come back to that gap today. Right now, 528,000 shares. Yesterday, 642,000 shares. So again, we're back to some fairly long-term support in a lot of these stocks, and these are where they need to hold. Fortive. 3.7 million shares back on April 27th, 68.87. We went through that last few days. To 1.5 million shares, 3 million shares yesterday, 1.5 million shares today against that 3.7 million share low. Let's get down here to a little bit more of them. GLW, which is Corning, and it's doing nothing. See some of these other stocks down here. GSKY, G-Sky, Green Sky, and nothing in that either. Let's go ahead and look at a few of the bigger stocks like Amazon and see how they're doing today in the last couple of minutes of this segment. Okay. Okay. Okay, you come back into the gap. Volume of 4.7 million shares compared to the 8 million shares yesterday. So you're doing a doji. So either the halfway move down or a possible bottom with that doji today. I got some questions out here. What do I think of MDR? MDR. Okay. McDermott, I saw this. In fact, we just didn't get it down far enough on my list. It needs to close back above $6.97. That's the October 31st low. 42 million shares. You've had 3 million shares, 4 million shares today, 3.6 million shares, but you are closing below it. A confirmation of a low would be a close back in above $6.97. You've had 2 days. Generally, by the third day, if you don't get back into that, it kind of negates the ability to do that. Okay, and what else do we have? Still up 17 on the NASDAQ, still up 3 on the Russell, and the Dow still up 60 points. So we've got that. One more segment. I think I got some more emails here. Get those answered. Celgene. We'll be back in a minute.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we had a couple more emails in. We'll see what we can get through here today. Celgene, question is, what does this thing look like? You got lighter volume today. You still need to close back into the trading range. And the problem is that you did come down on slightly higher volume. The IBB is one of the weaker sectors today, certainly if you compare it to the SMHs. The SMHs headed down first. The IBB followed it after it in the market decline. I suspect that means the SMHs have bottomed first, if we're going to have a bottom here, and that we're probably looking for some kind of sign in the IBB before you would go long any of these biotechs. Yes, it's down on light volume, but I think it's all about the Fed tomorrow and through Friday. Either we're going to have a Fed that says, you know what, enough's enough, or one that says, have at it, boys, and we'll be down yet another 1,000 points in the Dow before Friday. Given that, I'm like I said, I would much rather be in options with some limited risk, that we do have some kind of Greenspan market moment like November of '98. No guarantee. It's just the puts are at extreme levels where I don't know if you'd make any money even if you did buy them. So that is the problem, is the premium is way too high on the short side to probably make much of any money. So the risk reward isn't very good in puts here. But calls, if it flips your way, risk reward's actually fairly decent, especially with everybody looking down. Just turn that frown upside down. Have a smile. It's a nice day. Sun's out. It's glorious. Enough of the negative waves. In the meantime, sell when you can, not when you have to. We will see you here tomorrow for the Fed announcement. Gonna be time to rock and roll.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.